All right, let's get straight into the markets now to see what happened on the JSE. Well, the all share is down. Investors are concerned, but not necessarily about South Africa's big election day. The main reason behind the global and local market downturn, as some analysts would say, is the US-China trade tension. This after President Donald Trump upped the ante and threatened more tariffs against China at the weekend. So the all share, from retailers to banks, by the way, all in the red. The all share 1.1% down. You can see financials and that industrials also hit, partly because Naspers, the big weight on the JSE, down about 1.5%. Let's take a look to see what the miners did today. Gold miners slightly up today on a higher gold price. Anglo Gold Ashanti, by the way, almost 2% up. A little bit into the positive for platinum miners, and then those resources reflecting some diversified miners still in the red. What were your commodity prices like? Well, the trade tension also reflected in the oil price decline today. Look at that, at the moment below the $70 mark. More trade disputes means lower activity in the economy, and by extension that oil price is bound to fail, or bound to fall rather. Platinum is down and gold slightly higher than yesterday. The local currency, by this evening, the rand was round about the same levels as it was yesterday, 14.45 to the greenback, with international drivers perhaps more significant for the currency than the local elections. So 14.45 for the US dollar, 16 rand 17 cents for a euro, and this evening 18 rand 88 cents for a British pound. Nesson Nair of Sasfin joins me now to unpack some of those market activities. Nesson, thanks indeed for coming in. So, you know, one would think we are on the eve of an election, but as many would say, it really is those international drivers, the US-China conflict, that basically pushed or drove international markets down. The JSE didn't escape that.
Yes, absolutely. You know, the volatility in markets are being attributed more to international events, as you indicated, rather than domestic ones. I mean, this has been a really uneventful election, certainly as the market is concerned, and it's caused some market participants to ask, you know, is this the calm before the storm? Yeah. We expected a much more volatile currency, a much more vocal announcements coming in from political parties, but everybody seems to be well behaved for the time being anyway. We'll just have to see, you know, whether the results on Saturday upset people enough for them to, you know, to be a little bit more vocal.
But I did see today, Nesson, that trading volumes were a bit thin. Is this a sign perhaps that there is some cautious component here?
I think this is a trend we're seeing for the last several years now. Ever since SAB delisted, volumes in the JSE have come down quite significantly. And the concern is that with Naspers leaving towards the end of the year, and Naspers accounting for between 20 to 35% on some day of overall trading volumes, that number might even come down even further. The recent drop in volumes can be attributed to holidays, for example. I mean, we've had a few international holidays. But you know, if you sit in front of the screen the whole day, you can just see the volume pick up towards the end of the day when the Americans come on stream. And about 30% of volume gets done in the closing auction, which is the last 10 minutes anyway. So I think it's probably a sign of things to come, you know, lower volumes, and volumes, you know, coming more from international players than local players. You
mentioned SAB there in your answer. I mean, let's go to a company that took over SAB in 2016. AB InBev, they're planning to list the Asia Pacific part of the business in Hong Kong, yeah. And look, I mean, that stock has gained about 36% this year, hasn't it?
Yeah, no, it's been one of the star performers this year. Went through a very difficult 2018, especially with its US business and its South American business. I mean, the Americas in total make up about 60% of their revenue, and they really needed a turnaround in that business, you know, for the stock to do anything, and they've managed to achieve that in the last set of results. Organic volumes, you know, were up 1.3%. Revenues were up 6% because they were able to push in strong pricing in the beer market. EBITDA on an organic basis was up about 9% or so, but the real swing in the results was actually derivative transactions that they'd done. You know, the hedging transactions that they'd put in place was actually a bigger contributor to the bottom line than the operating activities.
So I walked up on the floor at about 10 o'clock. By that time, Steinhoff's expected 2017 results, we were expecting them today, still hasn't been released. What's going on?
You know, in situations like this, you've got to imagine that the delay can't be good news.
Yeah.
You know, so we've been waiting from 2017 for these results. We knew it was a big exercise. It was promised initially on the 30th of April, and then they moved the deadline forward to the 7th of May today. You know, a lot of us sat in front of our screens up until 5:30, which is when SENS closes, and at 5:25 they came out with an announcement that they expect to deliver the results later tonight. I suppose they've got an hour and a half or so still left, but I don't anticipate. I think it's a big challenge to put these numbers together, and the fact that it's delayed so many times, I think investors should take from that you know, it's not going to be what people expect.
So, two things, Yanis. Number one, the reason why we want to look at those results, because it's that year of results that led to that, that infamous resignation of Marcus Jooste, the former CEO. We saw that crash. What do you think, is behind the delay?
I think if you look at the level of, or the level of complexity of a lot of these transactions, especially with these third-party vehicles that sit off balance sheet, it's a commingled mess. It's almost like unscrambling an egg. And teams of forensic auditors are working on this now for well over 2 years. The fact that they can't get their heads around it means that it's probably not even humanly possible to do so. The best you can do is put a set of numbers on the table that are within 75–80% of the actual truth. The other reason behind the delay, potentially a more sinister one, is that once you do the analysis, your debt is much higher than what your asset values are, in which case the business is actually insolvent. And then you've got to address what impact that's going to have on jobs, on creditors, on the JSE. You have to look at all those things. So I think the delay is because they're trying to dolly up the numbers.
All right, we're going to have to leave it there, Nelson. Thanks indeed for coming in. Nelson Nye there of Sasfin.